In a pivotal decision shaking the global technology sector, the Netherlands is defying Washington's pressure, as ASML continues supplying crucial chip-making equipment to China. ASML, controlling 90% of the global lithography market, is continuing to ship deep ultraviolet DUV machines to Chinese manufacturers, challenging Washington's strategic plans. This move represents a significant break in the Western Front against China's technological advancement. Former ASML CEO Peter Winning's predictions about China's accelerated technological independence are proving accurate, as demonstrated by SMIC's recent achievement in producing a 7-nanometer chip. ASML's machines, particularly their extreme ultraviolet EUV systems, are essential for semiconductor manufacturing. Each EUV machine costs over $380 million and is crucial for producing cutting-edge chips, making them vital for controlling global technology's future. The Netherlands' defiance raises important questions about market dominance and global tech politics. Are traditional alliances becoming less important than economic self-interest? This situation shows the complexity of modern technology landscapes. While Washington pushes for stricter controls, allies like the Netherlands are choosing their own path, acknowledging that global technology's future might not align with American interests. Unlike the Cold War, today's stakes center on semiconductor chips powering everything from smartphones to military systems. A small European country's decisions could reshape the entire technological landscape. The semiconductor war is intensifying, and its implications will impact everyone. Stay tuned as this story continues to unfold, redefining global tech politics. In a dramatic showdown between global superpowers, the Netherlands is standing its ground against intense U.S. pressure, continuing to supply crucial semiconductor manufacturing equipment to China through its tech giant ASML. This decision could reshape the future of global technology production. ASML, the world's leading manufacturer of semiconductor lithography machines, finds itself at the center of an international tug-of-war. These machines, worth hundreds of millions each, are essential for producing chips that power everything from smartphones to military systems. The Biden administration has been pushing hard to convince the Dutch government to block ASML's sales to China. Despite mounting pressure, the Netherlands is refusing to fully comply with Washington's demands. In 2023, China represented 46% of ASML's total sales, bringing in over $7 billion in revenue. Cutting off China could destroy ASML's market dominance and push China to develop competing technologies faster. The Dutch government has invested billions in ASML's development, and they're not about to see that investment wasted. Beijing has warned of potential blacklisting if export restrictions tighten further. Reports indicate that China is stockpiling ASML machines and investing $143 billion in their semiconductor sector. The Dutch face a precarious position. If they bow to U.S. demands today, will there even be a market for ASML in 5 years? China's rapid advancement in semiconductor technology suggests they're not as dependent on foreign technology as Washington might think. This isn't just about technology or trade. It's about national sovereignty and economic survival. The Netherlands is essentially saying they won't be reduced to a pawn in the US-China power struggle. As this high-stakes game continues to unfold, one thing becomes clear. The global tech landscape is shifting, and smaller nations are increasingly unwilling to sacrifice their economic interests for geopolitical games. In a dramatic shift reshaping the global semiconductor landscape, China has achieved a 70% increase in advanced chip production during 2023, despite Western sanctions. This revelation from the Semiconductor Industry Association has sent shockwaves through the tech industry. The Netherlands' decision to continue selling crucial ASML equipment to China may be accelerating Beijing's technological independence. This development has caught Washington off guard, as their strategy to contain China's semiconductor advancement appears to be backfiring. Major players like Intel, Nvidia, and Qualcomm are monitoring this situation, as restrictions haven't decreased demand but shifted supply chains. Chinese companies have developed workarounds through subsidiaries and third-party arrangements, circumventing Western restrictions. The game-changing moment came with Huawei's Mate 60 Pro, featuring a domestically produced 7-nanometer processor. This achievement demonstrates China's growing capabilities. Beijing has doubled down on this success, with its state-backed semiconductor fund injecting $45 billion into SMIC and Yangtze memory technologies. Dutch semiconductor analyst Bert Vanderen warns that ASML's continued sales to China could accelerate Chinese advancement. This raises questions about whether the Netherlands is sacrificing long-term technological supremacy for short-term profits. The situation has exposed fractures within the European Union. While France and Germany support Washington's position, many European leaders express frustration over American companies receiving exemptions while European firms face restrictions. European chipmakers have been opposing full-scale bans. Their argument, if American companies protect their interests through exemptions, why should European firms sacrifice their market position? This technological power shift isn't just about semiconductors. It's reshaping global economic alliances and international trade relations. Breaking news. Netherlands defies U.S. trade demands, sparking potential European economic rebellion. In a significant challenge to U.S. trade policy, the Netherlands' resistance against Washington's demands has intensified, potentially triggering a broader European uprising against American economic directives. The controversy centers around ASML, the Dutch semiconductor equipment giant, whose actions could reshape the Western economic alliance. At the heart of this dispute lies China's dominance in global battery production, controlling over 77% of the market. Beijing's weakness remains high-performance semiconductors, crucial for electric vehicles. ASML, holding the keys to this technology, continues shipping DUV machines to China despite U.S. objections. This isn't just about ASML anymore, says Dr. James Morton, senior technology analyst. We're witnessing a potential fracture in the Western economic alliance as European nations reassess their alignment with U.S. trade policies. Bloomberg reports China's progress in semiconductors, with domestic production up 38% in 2023. SMIC's achievement of a 7-nanometer chip has sent shockwaves through the industry. The effects are visible. South Korea's chip exports to China surged 41% in 2024, while Japan faces pressure to relax exports. With China representing 46% of ASML's sales, about $7 billion, the stakes are high. If European companies comply with U.S. restrictions, they risk losing market share and enabling Chinese competitors to develop alternatives, explains Maria Chen, semiconductor specialist. This could alter the global power balance in automotive and energy sectors. The situation threatens U.S. automotive giants and their European counterparts. As China's EV market expects to exceed 10 million units in 2024, the combination of battery dominance and semiconductor capabilities could give Chinese manufacturers an advantage. Experts suggest this rift between U.S. and European interests might mark a turning point in global trade relations, leading to a new economic order where European nations chart their own course. Breaking news. Global tech war intensifies as semiconductor battle reaches critical phase. In a significant development, ASML, the Dutch semiconductor giant, faces a crucial choice between immediate profits and long-term survival. Industry experts warn that the company's strategy could lead to job losses and investment reductions. The Dutch government remains hesitant to enforce complete export restrictions without compensation, though this approach might backfire if China develops independent lithography capabilities. China's restriction of gallium and germanium exports has escalated tensions. The United States has responded with a $39 billion semiconductor expansion program, while the EU counters with its $47 billion European Chip Act. This conflict represents a shift in global economic power dynamics. We're witnessing the early stages of what could become a new economic Cold War, noted a senior official. Industry observers worry about the fragmentation of global semiconductor supply chains. Companies may soon be forced to align with either Western or Eastern blocs, ending decades of globalized trade in high-tech components. The technological standoff could reshape international commerce, with companies facing pressure to choose sides, potentially leading to a divided global economy with parallel technology ecosystems. The semiconductor industry could split into two distinct spheres of influence, explains Maria Hernandez, an international trade expert. This would fundamentally alter how we develop and manufacture technology globally. For stakeholders, the message is clear. The semiconductor sector is entering uncharted territory. The outcome of this technological Cold War will likely determine the future of global innovation and economic leadership. This story continues to develop, with significant implications for international trade and technological advancement. We'll provide updates as new developments emerge.